The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, noon till 1. And even more important than that, it's my pleasure to be following 2 great hours, Steve Rhodes, and then Steve was joined with Daryl Martin. Daryl comes on again, 1 o'clock, Diagnostic Trading Hour. You get Dave White after that, you get Ken Shreve after that, you get Tom O'Brien back here at 4 o'clock till 6, wrapping up the day. Great interview this morning, Tom on CNBC. Do us proud. Congratulations. And so let's look at this market. A little... Remember I spoke yesterday about, for my subscribers, they know that I've got a technique that I use called the ChapmanWave Trin Gauge. And all it is I use Richard Arm's short-term trading index in a particular way. And that said, within 2 days, even though the market looked horrible, said with 2 days, there should be a sharp rebound of 7 to 9, could even be 9 to 11, S&P mini, that's the E-mini, or it could be the S&P itself, points to the upside. And lo and behold, we've got that. And I call it a retracement failure mode. What do I mean by retracement failure mode? Grand Canyon, whenever you got that steep cliff on the left side because the market has come down, it means that you are retracing. All it is an explanation that says the steepness of the move down is such that any rally to the upside has to be considered a retracement mode, highly vulnerable and susceptible to failing. That's because of the steepness of the left side. So it's just an explanation, and basically what we've got here is that we've got a whole bunch of things going on. This is Technical Friday. Let me run the numbers. Let me show the charts that I've got up front here that if you're looking at Tiger TV, you'll be able to see. It's amazing. I have it right in front of me, and I always forget to actually set it because I want you to see. You know, last night I just found I missed my black background chart so much. I went to the black background charts. I like the ones that I'm looking at here, but I don't know if they really show up quite the way I would like them to show up. So I'm going to experiment just a little bit today. I'll be jumping around from different colors, but nothing will change other than the background of the chart. Most importantly, the Dow is now up 54 to 13,935. It was a tad higher before. The S&P is up 580 at 1508. So the Dow and the S&P are in line. I usually like to see the S&P a little bit with 500 stocks. I like to see it a little bit higher in percentage terms, whether up or down. That's number one. Number two is when you get the 500 stocks with a slight gain in the percentage on the S&P than the Dow, I usually find that that's a good thing. When I see that the Dow is lagging considerably, the Dow actually takes precedence. So this is good action right now. The comp index is up 13 at 3144 with Apple up only 2 points at 448. The gold contract is down 5 at 1573. Now, in the DZZ chart, I don't want to change chart. Yeah, I'll do that. No, I don't want to change charts right now. What you'd be looking at is that's the 200% inverse of the GL, or actually inverse of gold itself. And what you'd be looking at is this is a peak. See if there's no new high today. And my suspicion is by Monday, the latest Tuesday, you'll see a sudden spike in the DZZ as gold makes its final plunge. Now, I don't know if it's a final plunge or it's a final test of the low. I suspect it's not going to be a plunge because there's going to be a bounce, and that bounce is going to take us higher in the gold and silver as a counter. This is a real counter trend rally, and the counter trend rally should go into for a few weeks. Maybe 2 weeks, maybe 3 weeks. I'm not sure, but it'll be a bounce in which you can get a nice percentage gain on some of the gold stocks, not all. And then you've got to be looking to get out or to start looking at shorts or to raise your stops a great deal. That could come about in the next week, but to do that, you need to see the dollar decline. So silver is down 23 cents at 28.46. With gold at 15.73. You've got platinum down sharply. Copper is back down again, 230, down to 3.53. I have to tell you, I must respect that, which is one of the reasons why in my opening call, we still have three longs, which are actually still doing, so far, still doing really well. I've been wanting to add to the short side. Instead, I think just to be a little conservative, I'm trying to. And we missed by 1 penny, adding one of the shorts this morning. But we have got one, which is really a comfort because I see limited upside now, more downside activity than upside. But the way that the sentiment indicators scream to the upside is telling me one of two things. Either they've used up most of the energy so we could flounder in this trading range for another couple of days and then come down and then start making lower lows. Or it's saying to me, you remember that sharp move down when the trend went to 8.6, I think it was? Well, that means that we could have another week or so of down move to the downside. It could turn out to be more if the weekly charts start to test the 9-period moving average very soon, rather than having some kind of a bounce to say to me there's internal strength rather than there's internal weakness. So that's what I'm looking at. Now, if I'm looking correctly at the crude oil, yep, it's down 15 cents at 92.69. I hope I can get to the crude oil in a short while. I don't want to do it right now. I want to go to the charts that I've got right here in a moment. And bonds are only up 8.30 seconds at 144.03. This is significant. What is happening now is really, really important. I've thought about this for weeks, and then suddenly this morning it just struck me. What we're really looking at is frustration. There's a kind of a rolling entry into bonds that's going on, number one. Number two is there is some kind of, I don't know what it is. There's a particular word that I know, I can see it in my mind. I always forget the word. It's like there's a Freudian slip. When you see selling and you're going in a sideways trading range and it's just rotating in and out, but actually what you're looking at is people starting to get out. Why am I forgetting the word with a D? I think it's a D. I'll think of the word. It's very important. Just for years, every time I even wrote it down somewhere over here because it's the one word that is very important. I'll think of that word in a moment. And so that I think is happening in bonds. The other thing is that bonds have got kind of they went as far as they could to the upside. So yields went down to the downside as far as they could. Bonds to the upside. Therefore, what churning. We're just looking at a churning. Yep, I knew it started with a D. I knew. Let me write it down. Churning. There's another word that goes with it as well, and it's slipping my mind. But churning is the word that I'm actually looking for. And that churning says that there's wheel spinning going on, but nobody's getting anywhere. And at a certain point, you will see yields go high, even if the Fed doesn't want it. But it'll be within a containment area, just like the dollar. I'm going to watch the dollar closely. Fabulous move on the dollar. The dollar right now is up 0.6 at 81.61 in leg E in the daily. I'm getting some sign that we're getting really close to some kind of a short-term top in the dollar, some kind of a bounce coming up in gold and silver. We'll see if it's like a 2-day thing or whether it's something of substance. Now, I had a couple of questions in the den, but before I get to those questions, let me show you. This is the E-mini, the E-mini S&P 500 March contract. You will see that this is the 5-minute that I've posted right here. Make it nice and big. From the low bar of 1504, this is when I wanted to pick out. This is when I actually picked it up yesterday at 3 o'clock. Gave a nice entry point, and then what happened is, based on the 200-period exponential moving average, you see that gold line, that orange gold line? It went to peak ABCD, pulls back, holds the line higher high at 1504.50, and starts another ABCDE. That E is coincident with a lower top in the stochastic, with a turnaround in the MACD, with a touch of the 80% line. I believe it's, let me just double check. I don't want to talk out of turn. A 80% line. Now, I always have these charts up. I always have these particular indicators up. But someone had asked me, would you just show, this is a 70% line, right? That's a 70% line of the RSI. But now this is what's interesting. It pulls back, holds the 9-period exponential moving average, and goes to a nominal high at 1509.75. That is where you see that the RSI is pulling back, but the blue line here is actually moving higher, and that is the difference between the two indicators. And I love the fact that you can use them. Steve gave a great workshop the other night. He talked about the RSI. I know that Daryl is also using the RSI, and what Steve was pointing out is that when you make a lower high in the RSI as the price goes higher, that's the divergence that I always talk about. That's that right shoulder failure that I look at in the stochastic and the MACD. I love when you can put different techniques together to make them hold, to make them even more pertinent. And look what happened. The price goes higher. But when you got the Chapman wave, you know that that's an F. That's where, and a deflection low. You remember my CD introducing the ChapmanWave methodology? I talk about the deflection. Fridays where I get a little bit more into the ChapmanWave methodology. People call up. Last week we had a call on Friday, I think it was. Ilona called up about the S&P that I get a wrong notation. And I said there's a particular technique that I love to teach in my Master Trader series, one of which I'm level 2, which I hope to do very soon. And that is where it's something called the unconventional flat-based restart. You know, these terms are explanatory, so they're a little bit cumbersome, but it explains exactly what it is. I'll go through that in a moment as well. Now look what's happened. You break the 200-period exponential moving average. All the technicals are saying be careful. It tries to bounce, and it goes to a lower low. Well, what you want to look for is, was there a divergence? Like there was a divergence between the two indicators, or actually the 4 indicators, back when it went to a peak F. Well, now we put in the troughs, A, the lowercase. Oh, I've got the black charts up. So I got a black chart, so I'm going to go to blue. Actually, I should go to black. I'm going to start using black for the letters. This is a work in progress. It took me a long time to get to what I got to. With a black chart with the background. I know a lot of people have said, we really appreciate you doing the white charts. We like to print these out. So if you don't mind, could you try to keep up? I will do it, and I'll certainly do it for my subscribers with all the charts I show every single day. Now look at this. We've gotten to a G, but in fact there wasn't a divergence of significance, not yet, because the MACD turned down again. We're going to watch this closely until the E-mini goes above 1505. We're going to watch. If it does go above 1505, 1506, that's good. I'll be right back. Basil Chapman, 877.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back, and this is the Tiger Technicians Hour, 877-927-6648. I was asked about the NQ, this is the E-mini NASDAQ 100 March contract. It made a peak F-top, just like the Qs. 1, 2, 3, I think the Qs, yep. Qs made a peak F-top. At that's the NASDAQ, this is the NASDAQ QQQ Trust Series at 68.26. And that was after the leg, the body, the neck, and the head, and then the beak of the ChapmanWave stork leg formation. Now, this is going to be very interesting. The target for this move down over the coming, I'd say, into next week sometime, is that if the low of yesterday in the Qs breaks at 66.23, next target is 65.45, the 200-period exponential moving average, which in fact, 65.25, gets very close to filling the gap, that huge gap on the 2nd of January. Now, I suspect that because of the volatility index, remember yesterday we were talking about that volatility index? I went through it in great detail. Spoke about the short-term trading index. Well, look at this. Why am I having problems? Yeah, VIX.X. There it is. That volatility index, and one of the reasons why, based on the daily charts of the indexes and many key stocks, United Technologies, Triple M, not yet quite GE, although it's close, and certainly IBM, my Ford Dow Horseman, one of the reasons why I want you to be somewhat cautious here and to be able to get some what I would call insurance by shorting using an index is if there is, in fact, a decline, because the volatility index is so important in my work, because it broke out above 14.75 and then closed above there. That was the high in the pattern that I call the dreaded H, the lowercase h. That was the high of the 4th of February. Because it's holding above there, it's really important to monitor this. Because normally what you would do if you get one of those, this is one of the reasons why I was talking yesterday when we had a caller, we had Chris from New Hampshire. I was talking about the volatility index. I said, I think he's got a great entrance, and maybe what he needs to do is to keep the core. That was his idea. Keep the core, maybe even add to it if it pulls back. And one of the reasons is that if the strength of this particular volatility index, which tells you the intensity of selling and buying, I don't talk about fear and greed. Those are superfluous. They don't really tell you all that much. What it really tells you is that there was intense selling and buying of the volatility index. If that is maintained into the close today, and it's at 14.98, if that volatility index closes anywhere above 1450, but if it definitely there's a market self near the close and it starts to climb towards 1546, then all of a sudden what I'm looking at is, now look at this, I slide over and I say, hey, wait a minute, mister, I haven't quite completed this. Let me go to the black background charts if you don't mind. Actually, what can anybody say? I just said I'm going to do it and I did it. I can see it a little bit better. I'm still used to that. It's been 20 years or something with black background charts, maybe more. You see this? That low that was made at 1206, 1229, I think it was 12. Was it 12? Yeah, 1229, the week of the 18th of January. Did we not touch that? 1224, there you are, 1208. I knew we went to lower. 1208 this week, the volatility index went. Well, it's got a long distance to go to 2116, 2118, which is the 200-period exponential moving average. This green one here, I put the simple because some people like to look at simple as well, especially weekly charts. But it's saying to me that if it holds well, if it certainly holds above that level of 1475, right now it's at 1493, on a weekly basis, that says, hey, heads up, everybody, because we could be getting the same pattern with the stochastic as occurred previously. And that would say, be careful that the volatility index next week doesn't start to climb into the 1590 to the 1630 area. That's really what it's saying. So I thought I'd go back. That's the weekly chart. Now I need to add, because the month is closing in a week, less than a week. Remember I've spoken about that 9-period moving average on my monthly chart? You know what? The black charts really show up nicely. I love these black charts. Yeah, it looks a little messy, but the stuff I want you to look at those peak Ds in the ChapmanWave. The stuff I want you to look at, I'm going to expand it. You can see it. You see the yellow and red lines for the MACD. You see the yellow and red lines for the stochastic. You see the relative strength there. You see the 9-period exponential moving average. I'll be right back. Basil Chapman, 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Just to finish that thought, if in February the volatility index closes anywhere above 16.95, that's the 9-period exponential moving average in the monthly chart, all of a sudden we've got a different picture, at least for the shorter term. And I still expect this to be a leg B consolidation in the S&P and the Dow weekly charts. We should still go to a C and a D higher. And so that's all I'm saying. And the stochastic is flat at this particular time, and so is the MACD, still negative in the monthly chart. So let's see how it closes. Last day of February. I should have a calendar in front of me. I think that's Thursday, is that? What are we doing now? We're in February. Yeah, February the 22nd. Oh, Thursday. Yep, Thursday's it. 28th. Gosh, I should know that. 28th. Okay, so we're going to go to our first call, and we've got Mike in Long Island. Hi, Mike. How are you?
Good. How are you doing?
I'm doing very well. Thank you.
Excellent. Urban Outfitters. I'd like to look at that.
Okay, now this is funny that you should mention that. It's almost like you're psychic here. I spent a lot of time. Yesterday I did an update, one of my very rare updates. Normally I found over the years, and it's funny, it would have worked like that exactly the same today. I found over the years, except for once, it was March of 2008 or something like that, when the market was really tanking. We bought the DXD, short the Dow, on a call. It was March, I think it was. And And we got a huge gain from that. And I would not have got it if it wasn't for that 12:30 or 12 o'clock, whatever it was, update. Normally I found that you got this thing that the Micah could do a whole bunch of stuff. So I say, okay, maybe I should give an update. Occasionally I do give an update just to affirm what we're looking at with no trace, just to say, yep, it's just as we thought. My reasoning being that invariably, I cannot believe how many times that I did over the years do updates during the day. I could have got the same or even a better trade the next day. So now I've just decided not to. But yesterday was exactly the day. I couldn't tell you how long I spent. I said I'd do the updated one. I spent from the moment I finished my show deciding between Urban Outfitters, URBN, Panera Bread, and there was another stock that I had written down. I think it was, I can't remember offhand what it was because I looked at so many charts, but one in particular that might have worked out. But in the end, what I decided was Urban Outfitters was on its way down in an arch formation. What I really wanted was a bounce with a close near the 9-period exponential moving average to short, and that would be at 41.18. That was number one. And here's my explanation why I was looking to short. I'm going in the long term. The long term has made a series of peak Ds. There's a technique that I teach in my Master Trader series and in my CD introducing the ChapmanWave methodology, which is only available at TFN. And that is when you've got a series of highs that create a trend line. It could be 2 points, but I like 3, and 4 is even better. What I do is I change it to a green, because if it breaks out above that and then closes 2 out of 3 bars, that's really positive. It's broken away, and it doesn't even want to come back and test what I call the sell zone. What is the sell zone? It's that little area I usually say to, it's a funny thing because here we are talking points and all that stuff. And then I come up and I say, well, it's about 3/16ths of an inch. Normally it's about between 1/8 and 3/16ths of an inch that creates this thing I call the inside track. That inside track is very, I keep changing it to red, but it's not changing to red. Ha, that's interesting. Oh, there it is. Oh, that's because I had a black behind it. There it is. And that says every time it gets into that area, you got to be careful because, look, it's gone there from the moment you got the point of contact. It's been there 1, 2, 3, 4, 5 times, and it hasn't been able to close above or even inside that inside track to go to the green line. Well, if that's the case, then Urban Outfitters, and the only reason why I hesitated a moment is it's correct to short when the trend is defined extremely well. So the monthly chart made a high of 43.81 in January, and this month it's made a high of 44.15. So it says I've got a leg D. I do not have a peak D. Every other peak D on the one single, what I call a right arm extension E to 40.84, that was the month of April of 2010. It's just gone down really quickly in the bar that confirmed the top or the very next bar. So I said, okay, I haven't got a confirmation yet. The on-balance volume gave a high already, and the RSI already confirmed the high back in April of 2010. That's one of the reasons why I say with these particular indexes, you've got to treat them with a great deal of respect because they are right a lot of the time. When they are wrong, they, of course, don't know they are wrong. They're just doing the job that they do. They look at the look-back period of 200 bars with the close, with the last close as the most emphasis. That's all it's doing. But it went back to a higher high, to the 44.40. Is it 43 or 44? I think I said 44.15 high. So that's the monthly chart. So anything that you do beforehand says the monthly chart is the major tide, and so far you haven't got a change of tide. Ha! Now we get to the weekly chart. The weekly chart had a lower MACD. It went to a peak D. The weekly chart has given a signal both in both of my major indicators, actually 3 out of my 4 major indicators. And it says closing, and I wasn't sure yesterday whether it was going to close below the 9-period exponential moving average in the weekly chart. And now we've got the confirmation it is, because that's at 41.19 and the price now is at 39.87. URBN, Urban Outfitters, we're looking at. The last peak D saw a pullback from 40.65 down to 34. That's 6 points. It's about 15%. This one, you've gone back in off the ChapmanWave cup and ladle breakout. If you go underneath the lip, the breakout 40.65 and close under there, got to be careful because you've got to look for a major candle or major support on the left side to say where will it stop. So the target would be 37.73. Now we come to the daily. The daily says I've got an arch formation. I've got a left side, right side price projection with the ChapmanWave inside track that says 37.73, the low of the 27th of December, should be hit, and it should be hit by the 6th of March. Now I'm going to ask you, what are you doing?
Earnings. I don't have a position right now, but they report earnings in early March, and
really
looks interesting to me. Can you put it on your screen? I mean,
the earnings.
Right. Just follow it in the next week or so. And
yes, to watch it, because maybe there's a chance to do something with either an option or something. Do you know the date of earnings?
In a second.
I can get it right here if I can just pick it up. So this is Urban Outfitters. It's good to know, folks, because
13, March 11th.
Oh, all right. So I've got March what did I say it was? I think I said March the 6th, right? What did I say? March the 6th. It should be testing. It should be testing that level. So this has a history of breaking down, and it's done that back in March of 2011, August of 2011, and then again in September. So it has that. But in terms of the gaps, let me just have one quick look. Oh, there's a gap beautiful gap from 31.80 to 35.91. Beautiful gap from on the 8th of the 21st of August of last year.
You also had that buying climax that you look at back on.
Right.
The 11th of January 2012.
I didn't see that.
Been a great time to buy this.
Oh, thank you. Oh, my next Master Trader Series, are we going to have fun? Have I got some charts to show and some techniques to show? Let me write it down. I'm not going to move. I don't care what happens. Selling Climax. Here we go. Selling Climax. This is called Selling Climax. It's actually a volume selling Climax. This is Urban. What's the date? The date is right there on the 11/1. So this is 1/11. Good. I've stuck it in my book. Oh man, I must have at least 1,000 in this book charts to look at. This is fabulous. So, and actually on my black charts, I haven't got time. I don't know if I'm going to even bother to get the black charts, which have all those retail retail stores notated. I'll probably get it onto the white charts one of these days. So great. So that's what I'm looking for. You don't have a position.
No, I'll wait for you to pull the trigger.
Okay, it's on my list. And what we might do is this is great, because if I decide not to do anything, it might be that there's a huge gap to the upside.
Okay.
We might take that as a potential short. I'll have to read that and see where it is as it is. Now, what did you say? It was the 13th? So 3...
this is from Yahoo, so I don't know how credible, but it's the Yahoo has it as the 13th of March.
Okay, I've got it here as...
Not always accurate.
I should be able to find it. All right, I'll look for it, and maybe in the break I'll have it. I'll check it out. Hey, good eye, because this is the one, as I said, this is one that I was, in fact, yesterday going to have. It would have been a nice short because we would have got it somewhere around 40.30, I think it was, and it's at 39.86. But you know what? I wanted the bounce. I just wanted the security of the bounce. But thank you for that information, and I'll be keeping a check on that. Have a great weekend, Mike.
You too. Bye-bye.
Let's go to Mike in Ormond Beach. Hi, Mike. How are you?
Great, Basil. I'm looking at the longer-term chart of the S&P, and I know a while ago, like a couple months ago, you said that according to your monthly wave count, I guess now we are in leg C.
Correct.
And the earliest we could get a top, which would be a peak D, we wouldn't get the confirmation until May, correct?
The
Because
confirmation, let me clarify for people who might be new. What I look for is from a buy signal to a sell signal. In fact, let me just change this right now. I'm going to change it right as we're on air. This is going to be a down arrow, and there's going to be an up arrow, and that's the way I'm doing it now. I could turn out to be wrong if we suddenly crash and go below 1420 in the S&P. I'd have to reassess, but so far everything seems to be fitting nicely. This month, the high is 1530.94. If for the entire month of March, the S&P does not break, I'm going to type that in, 1530.94. Let me type it in so I don't forget. 1530.94. Then you've made a peak C. That implies that in April, if there's a higher high, in other words, it goes 1530.95, that's how precise this particular technique is. If it goes 1 penny above, that starts leg D. Or it could be 2 months' time or 3 months' time, whatever it is. If it goes above whatever peak C is by 1 penny, it starts leg D. But on February, a week from today, which will be March the 1st, if 1530.94 is broken, or whatever the high is going into Thursday's close, that extends leg C.
Mm-hmm.
It takes a lot of words to explain. It's a really simple technique. Let me go through this again. If in March, if the high of 1530.94 is the high, the whole of March doesn't break that, it could go to 1530.93, but it doesn't break it. That is peak C. Mm-hmm. If it closes under 1434, which is the 9-period exponential moving average, I'd say, got to be careful. Maybe that is a G, because we've seen those Gs occur in the daily charts lately. If the stochastic, which is 80%, is going below 80%, I'll have to rethink it. So far, there's nothing to say that it isn't leg C. Now, my target is this pink area. It doesn't show up as pink. Hey, what happened? Doesn't show up as pink. Yeah, it shows up as a color, but it doesn't show up necessarily as pink. But that kind of grayish area over there has been my target for some time. And that goes from that goes up to 1476.09, and that was the high of October of 2008. But, so that answers your question, right?
Yeah.
Now, since you brought it up, it's an amazing thing. First of all, Urban was the stock that was going to be my choice yesterday to go short when I updated everybody. I decided not to. Now comes the next thing. Last week I was discussing with Ilka from Boston that there was an unconventional flat-based restart in the S&P, which could make it a leg D and then a peak D. That's confirmed. So, if you want to hold on, I'm going to go through it for a moment. So you don't have to hold on, but I'm going to go through the S&P daily. Do you mind holding?
No, that's great.
Okay, great. Then I can go through some of the techniques. I'll be right back. Basil Chapman, 877-9276.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Dow's done up 64. S&P's up 728. Fascinating market. We decided, I decided from yesterday, we were looking at the gold charts, and there's just the possibility that a couple of the gold stocks might be ready to have a pretty nice bounce. So we're going to be watching this real closely. We tiptoed into one this morning. We'll see. We'll just see. All you can do is look at chart pattern and see what happens. So the S&P, what I'm looking at here, and this is very interesting. There's a technique that I use that's called the instant restart. In this particular case, this particular pattern accomplishes two things. It gives me the instant restart, but it also gives me something that I call the ChapmanWave unconventional flat-based restart. And basically what that does is in the S&P daily chart, the high of 1509.94 on the 30th of January pulled back to the 9-period moving average. Then within 3 sessions, it turned out to be 2, it spiked to a higher high. On the first, it went to 1514.41, and the low was 1498.11. So the low of the 31st was at 1496.76. Then what happens is the following session, the 4th, after that leg, a peak A is made because 1513.17, just 24 cents below, makes a peak A. But the price goes not only under the bar of the 31st, which is right after D, where you would expect it should hold. It went under 1496.76 to 1495.02. Not much, but just enough to normally negate anything. But when you recognize patterns, and I had both an instant restart as well as this pattern that I call the unconventional flat-based restart. The flat-based restart is where the movement after the very first peak D that goes to E/A pulls back. Normally it doesn't break the low. And then it goes on, but within another couple of bars, the next peak, you come right back, but you don't break it. That's a hint to say this is not an instant restart that can go to D, E, or F, but this is something that can probably go to a D, maybe an E. But when it comes down, it's going to come crashing down, and it's going to come down to the starting point. Well, this went to a B at 1518.31, 1518.31. Oh. That's right. That's a parallel wave count. That's what I was using. The parallel high, and then it goes to a C, then it goes to a D, and it pulled back and it pulled back. Where? It pulled back right to yesterday's low of 1497.29, just off the 1495 area. So it's meeting all the criteria, but it's not that. It's the pattern itself. When you recognize the cluster pattern that didn't break out decisively like it did when it had the same pattern back in January the 17th and 18th, when it just started to move with a neck that was going higher and higher. So that's what I wanted to mention, that this met the criteria for an unconventional move and a pullback. The daily Dow, the DIA, did exactly what we wanted to see, and that was, in fact, that accomplished everything that we were looking at. So when we're looking at these particular charts, you can see that patterns repeat over and over again. So I just wanted to say that occasionally you get this fussiness. That's what we just went through. But on the other hand, the monthly chart, to this particular point, is absolutely clear. So I wanted to just clarify that one could be a tad fuzzy where you're going to use other techniques. One, with the techniques that we have, is very clear. So I hope that's good. I hope you can have a good weekend, Mike.
Yes, thank you. I might email you. I had some further questions regarding this, but maybe I'll email you and...
Email me. I'll send back charts, and if you want, call me on Monday, and we'll go through it again. Thanks so much for calling. Have a great weekend. Folks, stay tuned. You've got Nico and Paige coming up. Fabulous show. Then you've got Daryl Martin. You've got Dave White. You've got Steve. You've got Ken Shreve, and you've got Tom O'Brien. Have a wonderful weekend. My service is there.